While all the headlines are focused on Wall Street, one of the wildest financial stories of the year is actually playing out in Japan. Their stock market is on an absolutely incredible run, and it's defying all the expectations. But the big question is this for real? Is it a solid boom, or just a bubble that's waiting to pop? Let's dive in and figure this out.
Take a look at this number, 25%. That's the return year-to-date for Japan's main stock index, the Nikkei 225. Now, in a year where most markets are just trying to stay afloat, a surge like that is more than just impressive. It's the kind of thing that makes you stop and ask, wait, what is going on here?
And this isn't just a big number in isolation. The Nikkei isn't just doing well for itself, it's actually blowing past some of the biggest players on the planet. It's ahead of the tech-heavy Nasdaq and the S&P 500. As of right now, Japan is leading the global pack. It's a pretty big deal.
And this is exactly where the story gets puzzling. I mean, it just doesn't seem to add up, right? We're hearing about wages not keeping up, the Bank of Japan is actually raising interest rates, and the whole global economy feels, well, shaky. So how on earth is this boom happening? Let's break down the hidden forces at play.
To really get this, we've got to cut through all the noise. There are so many conflicting signals out there, and we need to figure out what's really pushing these numbers up.
For instance, look at this. On one hand, real wages in Japan have actually been falling for 10 months straight. But on the other hand, corporate profits are through the roof, mostly because the yen is so weak. These kinds of contradictions make it almost impossible to get a clear read on the situation.
So, to make sense of all this, we're going to use a framework from our source material called the four-layer analysis. It's a really smart way to organize all this chaos and boil it down to a single clear score of the market's health.
And the real power of this method is that it stops us from getting fixated on just one thing. It forces us to look at the whole picture by combining four totally different areas: what the market itself is doing, what the government's up to, how trade is going, and the whole geopolitical vibe. It's pretty comprehensive.
So, these are our 4 layers. We're going to go through them one by one and give each of them a score to see if it's acting as a tailwind, pushing the market forward, or a headwind, holding it back.
All right, let's get into it. Time to start peeling back these layers, and we'll start with the market itself.
Okay, first up, layer 1, market internals. Think of this as us taking the market's pulse. We're asking, how strong is this rally really? How many different stocks are actually going up? And how bumpy is the ride? What's the volatility like?
And the score for this layer is 55.6. Now in this system, 50 is neutral, so anything over that is a good thing. We'd call this a mild tailwind. The rally is strong, and it's broad. On an average day, nearly 180 of the 225 stocks in the Nikkei are climbing. But what's keeping it from getting an even higher score? Well, it's volatility. The Japanese market is way jumpier than the US market right now, which tells us there's still a bit of nervousness under the surface.
Next up, layer 2, policy and finance. And folks, this is where things get really fascinating, because there is a serious tug-of-war happening here between two massive forces pulling in totally opposite directions.
On one side of the rope, you have forces trying to slow things down, what we call tightening. The Bank of Japan is raising interest rates, and government bond yields are at an 18-year high. That's the brakes. But then, pulling in the complete opposite direction, you have the Japanese yen being super weak, which is fantastic for exporters. That, plus the high stock prices, is actually making it easier to do business. It's a real battle.
So what happens when you have two huge forces pulling against each other? Well, you get a score of 49.4. That's about as dead neutral as you can get. For now, these powerful forces have basically canceled each other out, leaving the market in this really delicate balance.
All right, for our third layer, we're going to look outside Japan's borders at trade and supply chains. How is the rest of the world's economy affecting things?
This layer scores a 48.3, so it's a slight headwind. It's dragging things down just a little. Now, the good news is that global supply chains are pretty much back to normal after the pandemic. But the bad news, and the reason for the low score, is new tariffs from the US. They've really hit Japan's car exports, causing a drop of more than 10% in shipments to the States. Ouch. And that brings us to our final layer, the really big picture stuff, the geopolitical climate. This basically measures the risk level around the globe, from wars to trade fights, and how it might spill over and affect the market.
And this is probably the most surprising score of them all, 55.0, another mild tailwind. Now hold on, this does not mean the world is a calm, peaceful place. Far from it. But what this analysis suggests is that for now, all that global tension hasn't really translated into a major drag on the Japanese market specifically. It's kind of like a low-grade fever instead of a full-blown illness.
So we've analyzed all 4 layers. We've seen some good things, we've seen some not so good things. Now it's time to put it all together and get our final answer.
When you put all the pieces together like this, you can really see the dynamic at play. You've got the market's own internal strength and that surprisingly okay geopolitical score giving it a lift. Meanwhile, that neutral policy situation and the little drag from trade are keeping it from totally taking off.
And that brings us to the grand total, 52.1. So what does that mean? Well, it tells us the market is cautiously bullish. The tailwinds are just a little bit stronger than the headwinds. This explains both the incredible performance we've seen and that feeling of uncertainty that's still lingering.
But we're not done yet, because this score is just a snapshot in time, right? And things could change really, really fast. So we have to ask, what could throw a wrench in the works?
There are really 3 big things to keep an eye on. First, what the Bank of Japan does next. If they get more aggressive with interest rate hikes, that neutral policy score could turn negative in a hurry. Second, those U.S. tariffs are still a major threat. And finally, number 3, any big geopolitical shock could send waves through energy prices and currency markets, and that would hit Japan hard.
So that leaves us with the big question, doesn't it? This whole rally is built on a really delicate balance. It's got strong momentum, but it's also being threatened by these outside forces. Whether this boom continues or if it's heading for a fall is going to depend entirely on how these key risks play out.